Subroto Som, Executive Vice President and Head of Retail Banking Group at Mashreq Bank. Welcome. Thank you very much for your time.
Thank you, Richard.
There is an enormous amount of change going on in the banking sector. The digital transformation, the customer perceptions, the way we live and work. Can you tell me what are the most significant changes that are taking place in the retail banking space and what's driving those changes?
Well, the changes like the rising cost of compliance and the rising standards for very right reason of regulatory compliance are normal. Also changes like flattening asset growth and compressing margins are normal. But I want to take this opportunity to talk about what's happening in the digitally driven retail banking. I believe these are the most exciting times, and what's going to happen over the next 3 to 5 years will change this space significantly, and that's excitement.
So it's tech that's driving these changes, or what is behind it?
I think there are two big forces that are driving this change. One of them is the technology, but more than technology, the mobility part of technology. But the bigger part of that is actually the customer adoption. We are seeing for the first time, or in the recent times, that customer is getting more and more comfortable in using the mobile phone as a device to do financial transactions. Let me elaborate a little bit. Technology has been there for quite some time, but the technology is getting cheaper, more robust, and is getting to a size and type that you can use in small bits and pieces. You don't need to overhaul the whole technology if you want to bring in a new capability. The time that you take to integrate that, the time that you take to implement it are short and quick and less expensive. So that's one big force, because if you had to do in the past any technology operation or any technology upgrade, it was a very, very long process and very expensive. But these technology changes have been there for some time. What's changed is the acceptance by consumers of the mobility that the mobile phone has brought, and the way the power of the mobile has emerged, and people are feeling more and more comfortable to do financial transactions. They were booking hotels, they were buying clothes, they were going airline tickets, but now they are getting more comfortable in making payments, opening accounts, doing transactions. So I believe it's the second which is driving this change.
So where is the front line in the competition between different banks then? In the past it might have been your branch network and how easy it is to get to your local bank. Is it now, well, I won't ask a yes/no question. Where is the battleground between banks competing for customers?
So let me state some numbers and what we have seen in Mashreq in the recent past. Today, in the retail banking space, over 70% of our new retail accounts, are actually being opened digitally. Let me give you some numbers from Mashreq. In the recent past, we have seen that the number of transactions in the branches over the last 3 years have dropped by 60%. Today, close to 70% of our new retail accounts are opened digitally. People who came to the branch in the past, they were doing on an average about 18 transactions a year. Today, they are doing less than 6. So as you see, there's a dramatic change in the customer behavior. During the same period, we have seen the transactions on the mobile devices more than double. So if you put all of this together, you are reaching a stage where more and more consumers are doing more and more transactions in a digital way. We have also seen today that there are many services and transactions that were earlier not being able to be offered on the brick and mortar are getting available or are available to consumers on their mobile. Some examples are cardless cash, the card control feature, the 24/7 payments, 24/7 remittances, instant credits, and so on and so forth. So this is really changing the whole landscape.
And so what does that mean for traditional banks? So where do the traditional banks, which you think of a branch and you think of a safe with all the money in it and the bank manager. What does all that mean in the future of banking, and how must banks adapt?
I'll probably answer this question in two parts. One, these external changes as they are taking place, big traditional banks are not sitting idle and waiting and watching. They are making significant changes inside them. In the beginning, it started by most banks offering an online and a mobile banking capability and building capabilities over time. I think as time has reached when they need to rethink and are rethinking the approach. And the approach consists of actually rebuilding the whole tech stack that they have, changing the ways they work, and bringing in new products and services going forward. The second, I will talk a little bit about how banks and consumers are interacting. For the sake of simplicity, I will divide that into three distinct activities: acquisition of customers, transactions with customers, and engagement with customers. I think most work has happened in the transactions piece. More and more activities could be done on the mobile and online space. Increasingly, more work is happening in the acquisition of new customers. But the real winner will be when you're able to engage your customers digitally, because you're able to do it at the time, where he wants, when he wants, in which form he wants. And the mobility allows you to do that.
Why is engaging customers important? Because presumably when somebody they decide to go with a particular bank, you're never going to lose them, and if they are engaged or not, is that important?
I think retail banking is definitely going through a fair amount of change. While you will need banking, but you don't need banking to be done in the bank. And I think more and more transactions are getting fragmented and are getting done at different places at different time. And I think it is from that perspective, you are seeing a couple of things. And let me just share what I have seen, probably in a market which is most developed, that is China. The retail banking space, or the consumer payments and wealth management space, has radically transformed. Companies like Ping An, Tencent, and Alibaba have transformed this space and brought totally new models. Super apps and ecosystems drive the new engagement and new business model. So a consumer is in an app and is doing different activities. And while staying within the app, they can make payment, they can borrow money, they can invest in a stock, security, or in an opportunity. And this is done without leaving the app. And this is what is capturing the consumer's mind. And hence the consumer engagement is important, because he doesn't decide to do something for the financial purpose. He is doing other activities, and the financial activity or transaction is mere facilitator. He either borrows money or invests or transacts. And that change is what is driving this new ecosystem.
So the new bank branch, the high street branch, is now a super app. It's on your phone. Your bank branch is on your phone with all the services digitally. The actual calculations can often be done with algorithms and robots. So So what does this mean for banks themselves? I mean, are banks basically tech companies that are on your mobile phone now? And what is the relationship between the algorithms and the app and the working capital of the bank? Is it still the same entity, or have we got different structures now?
Quite a few questions in that questions. Let me break it down. First, I think banks will not disappear. They will always be needed. They are very important for the economy. They're very important for governments, and they're very important for financial stability and security. However, retail banks will transform, and I think that's what we need to kind of focus on. The second, these retail banks are being driven, as I said earlier, by consumer demand and behavior change, and are enabled by new tech changes and new tech capabilities that are coming in place. This will be possible when banks collaborate with fintechs, with technology companies, and with other non-bank players. And this new collaboration is the future. We should also be careful that not all consumers will behave in the same way. Whereas a large number of consumers are adopting to mobile and to mobility and to digital, there will always be some customers who may lag behind or may not choose to do that. It is not a function of age alone. It's a function of your attitude and your aptitude. You may need some branches for them. You may need branches for certain activity. I think the number of branches will reduce. I think the size of branches will change. I think what happens in a branch will change. And I think the look and feel of the branch will change. But branches will not disappear.
So you talked about the future look and feel of the banks, the role of banks with fintechs to provide new services. I would like to explore that relationship then, how it will work. How does the relationship between a bank and a non-banking institution or a non-banking entity like a fintech, how does that network work? Is it like a supply chain agreement with a multitude of fintechs at the bank at the center? Is it partnerships? Do you acquire the fintechs? Just explain a little bit how it's going to work.
I think what's happening with fintechs is they are very creative and innovative people who are trying to bring in new technology, new process, and new capabilities. But they're not full-fledged. They capture an aspect of a customer experience or an aspect of banking. That is where you have a multitude of them. And in a way, suddenly we have an explosion of capabilities and people who bring new ideas and new process. You need to collaborate with fintechs. You don't need to, they are not going to take over your business. They have excellent technology and capability, but no customers. Banks have traditionally good customers and regulations, and they are always investing on new technology and experience. So the collaboration is imminent. But it's not a collaboration which is you do once and you forget. I think there's a bigger sense of co-creation and growing together. Because when you come together, you try and solve a pain point, you try and bring about a customer experience, and then you realize that you can do a lot more. And that is what the future is. So hence, it is not a static relationship, it's a dynamic relationship, and it's a one-to-many relationship.
And how big will the ecosystem of partnerships be? I mean, will you have hundreds of fintechs, or will it be 2 or 3 sort of prime partners and they'll have their own networks? How do you foresee the scale of that kind of ecosystem?
I think first thing is banks who want to really play in this space will need to reorganize their technology stack differently. They have to, as I call it, modernize their technology stack. Couple of things like, getting cloud ready, using microservices and API, using advanced analytics, making the core very light are some examples of how the bank needs to modify and modernize its infrastructure. Then it's able to play with the fintechs. And I think in my idea, it will not be 1 or 2. You will play with a numerous and multitude of fintechs, ecosystems, and collaborations. I don't think I can answer the question of where it will end and how it will evolve. But it's clearly every step that you take today will decide what's possible in the future. And it's a win-win for everybody.
And will my relationship as a customer be with the bank, so Mashreq Bank? Or will I know who the fintechs are that are providing me with the specific services? Or is it I go through the Mashreq super app and then there's all the services inside that? Is there any connection with me and the fintechs?
Interesting question. Lots of questions that are emerging. I think the issues of who owns the data, who owns the customer, the data privacy, data secrecy are all challenging and emerging things that are getting solved. There are some fintechs the consumer will like to know and needs to know. There are some fintechs, they are embedded, they don't need to and they don't care. So I think it's a combination. But the ownership of customer, the use of data, the governance around it and its use is a critical driver. Governments and regulators can facilitate, can govern, and will be a major factor in its growth.
So with this multitude of partnerships, there are obviously lots of different technology relationships, data relationships, whatever. Is that must expose the sector to cybersecurity risks or increased cybersecurity risks. Are we secure at the moment, do you think, or do you think there still needs to be a lot more done to give confidence around cyber?
So I think there are 2 or 3 things in that underlying question let me address. One is that this transformation is not an easy transformation and is not a transformation on the edges. It's a fundamental core transformation. It has to start from a belief and from the top. Otherwise, it's going to be very difficult to carry through. It impacts not just the front line and the technology, it impacts the whole bank. Whether you are in HR, whether you are in compliance, whether you are in operations, whether you are in risk. So everybody has to be involved and part of that. Many banks are using agile technology to build this because this is building new ecosystem and culture within the company. You're actually getting new kinds of people working in a bank. I may have mentioned earlier, data scientists, data analysts, data translators, big data managers are all going to be part of the bank, UI, UX developers. The second is, this allows you to make small, quick changes and you have to be flexible to learn and adapt. You should be allowed for failures. You should not allow big failures to happen, but you should experiment enough to get to know whether to continue or to discontinue. And last but not the least, this will mean that you don't have all the answers and you don't know everything, but you know that the customer is responding every now and then, and you need to respond to them. The risks it brings are the following. There's clearly a data secrecy, data privacy. There's clearly a cyber security risk. There's clearly a risk of, are we making simple banking overcomplicated with models and artificial intelligence and robots that we lose control and we got to stay in control. But I think a lot of work is happening in those space to ensure that it doesn't happen. But this is a totally new ecosystem that's developing. Your question, are we safe enough? Enough is being done to make sure there is new developments in cybersecurity. But this is never going to be enough. You'll have to continuously keep improving and keep adapting.
So you have described a huge transformation in the banking sector. The banks themselves are going to have to restructure internally, and then they're going to have to set up a whole new set of networks and ecosystems and new relationships with customers. And there are these risks that you've talked about with future technology, AI or whatever. What does that mean for regulation? So the regulator's job is to protect the consumer and also make sure there's no overspilled damage or to the wider economy, etc. Is the current banking regulation system able to cope with all these changes? Is it prepared? And how do you have a view on how the regulators need to adapt?
There's a very big role that the regulators and the governments play. China is an example of where the regulator and the governments have allowed the ecosystem to evolve, emerge and flourish. I think that dialogue is a very bilateral dialogue in every country. The benefits of this and the risks of this are known to both parties, and that engagement is critical, is important. I don't think anybody will have all the answers at a point of time, but it's a joint journey that the industry, the country and the regulators will have to undertake, and I think is happening at various levels. So it's very promising, and I can only say that never has there been a more exciting time for retail banking, and what this is doing is allowing consumer experience to really improve. It will bring financial inclusion a reality. It will bring customer centricity like a reality. You can actually tailor make a solution and a service for one customer. And at the end of it, it will bring down the cost of credit, the cost of finance, and the whole financial system will become more efficient.
So what will a bank be in the future then? If you're building future banks today around all this technology and digital transformation, are future banks basically tech companies that happen to operate in the financial space? And then how do they compete with each other? What is your competitive edge if you're now tech companies, because you'll all have the same tech?
I think technology will not be an outsourced function and will not be a department. It will be core to bank. And in many banks, and technology, in the digital banks, technology is a core competence and capability and is built in-house. That's one. Second is, I think, most important player in this space is still the consumer. And what banks will own and work with is the consumer experience, the consumer services. They may use a multiple channels and partners to facilitate that journey. They don't have to do everything themselves. That is why the fintechs in the acquisition space, the social media companies in the engagement space, many tech companies in the transaction space can be part of an ecosystem. But understanding the consumer, safeguarding the consumer's interest, and facilitating all services will become important for banks. And there will be a co-creation, cohabitation, and co-growth opportunity with the other players. Some of these things are blurred and I think will emerge, but it's a great place to be where it is in the ultimate interest of both the consumer and the economy.
Fantastic. I would like to ask about the new players coming into the market. So we hear a lot about Google or Amazon or PayPal, all these traditional tech companies that are now providing financial and transactional services, and then in addition to that you have crowdfunding and other capital raising models. So who are there going to be new players? Who will the new players be, and what will they bring to the equation?
Let me answer that in three parts. One, the banking is still a regulated activity in most countries, and I think for a very good reason and for a very good purpose. But even within regulations, various regulators are allowing digital-only banks to emerge. Regulators are allowing banks to operate more digitally advanced products in a sandbox environment. So that's the first place. The second play is lots of non-bank companies are coming out with products and services that are bordering on banking. And I think that cohabitation will happen. It's driven by two things: data and tech platform. And last but not the least, I think, as I said, banking will get fragmented and doesn't have to be done in the bank premises. But from a consumer's perspective, he or she will see the transactions being seamless. And from a bank's perspective, they will see the ownership of customer, ownership of value creation, and many partners being part of the chain in delivering that experience. This new ecosystem is what's emerging as we see.
And is this where blockchain becomes important, or distributed ledger technology, where you have many partners in a system dealing with each other?
Blockchain is a very innovative and an important technology, particularly in reconciliation, in title, and in processing. Blockchain will definitely become a part of it. But from a retail banking's perspective, there are many other features that are playing a bigger role to start with. But blockchain also needs a lot more collaboration across different entities before it can come to an economic scale. But it will clearly play a big role.
Okay, thank you. One final question then. Tell me about the future of banking 5 years down the line or 10 years down the line. What will Mashreq Bank look like? No, or what will a bank look like?
I don't know, and I don't think anybody knows, but I know for sure that it will be different from what it is today. Some new models are emerging, but I think what will definitely be there is a much better customer experience in the financial space. What will definitely be there is a much deeper and a wider financial inclusion. What will really be there is the cost of credit and cost of finance will come down. I think the economies will become more efficient, and lots of different models will emerge and could even cohabit. So in a nutshell, probably the most exciting times for retail banking, and I look forward to the future.
Som Subroto, thank you so much.
Thank you very much.
That was fantastic.